Good morning. Today is Tuesday, February 15th, 2011. This morning I'm talking about it's just temporary. And that's the mantra that's coming out of the Bank of England as they had their inflation report today. Now, they're showing that inflation came in as expected at 4%, which is the highest level that they've seen in nearly 2 years. Now, this is twice the Bank of England target rate. All right, anytime they reach outside of the government band of 3%, they need to write a letter to the Chancellor of the Exchequer explaining what's happening, and the explanation is that this is just temporary. Not sure how I feel about that, but what's happening basically is that they're saying that any raise in rates is going to undermine economic recovery there, so they've been given a little bit more slack given the conditions we've come off of, but they're going to have to realize that sooner or later they're going to need to do something about that inflation. And they just had the different metrics that came in this morning. CPI was up at 4% as shown. All right, they had a retail price index showed that retail came in with a gain of 0.3% versus expectation of 0.2%. All right, there was home prices came in showing a gain of 3.8% versus 2.8%. So UK clearly has some inflation issues, but I think they're trying to maybe get a little bit of a higher off starting point before they start tightening monetary policy when prices come down. Now, meanwhile in China, they haven't had any inflation problems, or I should say that the inflation situation seems to be muted. They've reported less than expected inflation, coming in showing gains of 4.9%. The market was expecting 5.4%. So, there's some talk that perhaps the inflation story in China may be overblown. I'm saying not so quite, not so fast yet, folks. China still has a long way to go with what's going on over there as well. So just look at the market here. You can see the pound is higher, roughly up. We just hit just above that 161 area that was acting as support and resistance here, and now we're trading higher. You can also take a look at Japanese yen. All right, Japanese yen showing some weakness here. Let's go back to the 30-minute chart here. You can see that it's broken out of this range here at 83.5 and is now looks to be tracking a bit higher. Now, overnight in Japan, they had their rate policy decision. They kept rates steady at 0.1%, which that was no surprise to anybody there. That's what the expectation was. But the good news is that the Bank of Japan raised their economic assessment as global growth basically has been increasing the demand for exports. So that's a good thing going on for the Japanese economy, which means that we can see some yen weakness and some general risk taking. So we've got risk taking going on across the board, everywhere except for Australia, and it's a little bit of an interesting story, but let's tell you about Australia real quick. Australia, they had their minutes come in from their rate policy meeting last night, all right, and they said that perhaps a mildly restrictive monetary policy may be necessary. Was what the I believe the actual quote was. So they're talking about that consumer spending is going to slow down so that they don't have to worry about inflation. So it wasn't really a hawkish comment, which is sort of set the market tone a little bit negative on the Aussie. All right, next we want to take a look at the euro here real quick. You can see euro's higher, and just about everything's higher. It means we've got dollars selling today. Oh, actually the kiwi flipped to negative. We'll look at that in a second. Euro's higher as well. Okay, they came in with their GDP figures. The GDP figures came in a little bit less than expected. It was only off by about 0.1%. They were expecting a growth of 4.1%. It came in at 4. Okay, 1.5% for the fourth quarter period year over year versus an expectation of 1.7%. So it does show that they are growing, but the growth may be slower and moderate, which, quite frankly, that's not a bad thing. That's probably a very good thing. So, moderate, sustained growth going on in the Eurozone has increased demand for the euro. So that's kind of what we're looking at this morning. So far we've had, some of these inflation stories happening. Now, a little bit later in the U.S., we're going to get our advanced retail sales in about an hour and a half's time. That could be a potential market mover here, and I look around at the pound. I can see the pounds on the 30-minute chart. Starting to look a little bit toppy up here. Maybe we'll see something in the 161.50 area, which will act as a little bit of resistance that perhaps would coincide with what we're seeing. What comes out of the advanced retail sales number. But it looks like the this little range right here has been broken to the upside, as you can see. Just had a nice little breakout there. So perhaps the pound is going to stay higher, but maybe we get the pullback to around 161 on those advanced retail sales numbers. All right, we've got yen weakness, carry trades going on, people looking to take some yield. All right, Aussie is higher versus yen, and Kiwi is higher versus yen, but we have Kiwi and Aussie lower versus dollar, which is interesting. So we do have a little bit of dollar strength going on there. Perhaps that's in reaction to the Chinese slowdown in inflation. Perhaps that means that China is sort of slowed down their demand a little bit, which would affect both New Zealand and Australia the most. So that's what we're looking at over there. Now we've got the UK here, pound much higher. Looks like they're going to be content with inflation for a little while, and it's going to be interesting to see whether or not they're going to be able to control it. I'm not so certain that monetary policy in the UK is once what it was, and that they're going to have the ability to rein in the spending and the demand, if it needs be. So they're trying to offset the lack of government spending with consumer spending. They've got inflation going on. They want people to chase prices, which, I'm not certain how I feel about that. But if prices start to get out of hand, they could see a round of hyperinflation that could bring about government unrest. The situation in the UK is not as fluid as people would like you to believe, and I feel like a token move here to raise rates probably wouldn't have done any damage to the economy. But we're going to have to see what happens going forward. So that's what I'm looking at today, folks. Good trading to all.